Imagine waking up to find the world's most advanced chip-making equipment, worth tens of billions, suddenly rendered unusable, its control consoles dark, its precision optics frozen in time. Yesterday, Beijing slammed the door on ASML and TSMC, severing the last thread that tethered China to the global semiconductor tapestry. This wasn't a warning shot, a bargaining chip, or a temporary pause. It was a defining declaration. From this moment onward, China will chart its own semiconductor destiny, indifferent to Western licenses or after-sales support. For decades, the semiconductor supply chain was a marvel of interdependence. Dutch ASML supplied deep ultraviolet and extreme ultraviolet lithography machines that etched nanometer-scale circuits. Taiwanese TSMC rolled out the world's most efficient foundry processes, churning out chips that powered everything from smartphones to supercomputers. American design houses like NVIDIA, AMD, and ARM crafted the intellectual property, processor cores, graphics architectures, AI accelerators that dictated performance ceilings. And China's sprawling network of contract fabs provided the economies of scale, assembling wafers at volumes unmatched anywhere else. That delicate axis, multiple countries, thousands of companies, trillions of dollars, balanced on mutual trust, but today geopolitics has tilted it beyond recovery. On January 18, 2025, Beijing formalized what many analysts had only whispered about: a comprehensive, indefinite ban on all new purchases of ASML's DUV systems and any collaboration with TSMC on wafer fabrication. This edict followed three seismic events in quick succession. First, on January 15th, the Dutch government, under intense pressure from Washington, revoked ASML's export license for DUV equipment bound for China. Second, it suspended all software updates, technical support, and spare parts shipments for existing ASML machines in Chinese fabs. Third, TSMC announced it would comply fully with U.S. export controls, ceasing advanced process node partnerships. Overnight, some $15 billion worth of critical growth node machinery was effectively bricked, unable to run new jobs or receive calibration updates. For a country that imported between $2.6 billion and $6 billion of ASML lithography tools in 2023 alone, the message was brutal and unmistakable. Yet this wasn't a knee-jerk reaction. It was the culmination of a multi-year, multi-front strategy. In 2022, the U.S. imposed sweeping sanctions designed to choke off China's access to EUV scanners, machines essential for making cutting-edge 5 nanometers and below chips, along with high-bandwidth memory, advanced AI accelerators, and even foreign talent visas for semiconductor engineers. Many observers predicted that these measures would stall China's chip ambitions for at least a decade. But China quietly turned containment into a catalyst. According to Dan Wang of Gafkel Dragonomics, Chinese planners anticipated escalation, marshaled resources, and prepared fallback technologies long before any sanctions were signed. Paul Triolo of the Albright Stonebridge Group has noted that between 2022 and 2024, China poured over $75 billion into its domestic semiconductor sector through sovereign wealth funds, state banks, tax incentives, and high-stakes public-private partnerships. Far from retrenching, China accelerated, and the data tell the story in stark relief. Despite ever-tighter export controls, imports of semiconductor manufacturing tools into China shot up by 34% in 2024 alone, as companies raced to secure the last available Western equipment. Domestic construction of new fabs exploded. Dozens of new gigafab projects broke ground in Shanghai's Lingang district, Shenzhen's Shili subzone, and Chengdu's Tianfu new area. Spooled alongside these massive concrete and steel structures were more than 50,000 elite engineers redeployed from Huawei, Tsinghua Unigroup, SMIC, and other national champions. These weren't just hardware technicians, they were nation builders, adept at reverse engineering, process integration, and AI-driven yield optimization. They transformed factories into R&D crucibles. Then came the surprise attacks. In March 2025, a relatively obscure Shenzhen startup named Secar announced publicly that its new immersion DUV lithography system could pattern features below 7 nanometers, a technology milestone previously deemed impossible without ASML's EUV machines. Secar's announcement included live demonstrations, wafer cross-sections under electron microscopes, and yield data suggesting early prototypes were already hitting acceptable defect rates. Days later, Huawei launched the Mate 60 Pro, unveiling a 7nm Kirin chip fabricated entirely with legacy DUV tools, multi-patterning techniques, and proprietary AI algorithms for defect detection and correction. The tech world reeled. A device shipped to consumers that directly contradicted the notion that DUV had reached its limit around 10 nanometers. Meanwhile, SMIC, the state-backed heavyweight, began quietly prototyping 5nm processes by leveraging quad patterning, advanced immersion techniques, and AI-assisted process control. Industry whispers hinted that SMIC's 5nm pilot line was producing yield above 20%, and that internal roadmaps already extended to 3 nanometers, albeit with more complex patterning schemes. For context, in 2023, over 85% of China's high-performance chips were imported from abroad. By the end of 2024, that figure had plunged below 60%, a stunning rebound that signaled a tectonic shift in global production balances. This is more than a supply chain realignment. It's a redefinition of technological sovereignty. Each nanometer gained by domestic fabs translates into less leverage for foreign suppliers, fewer choke points for export controls, and greater strategic autonomy for Beijing. Today, China's state planners no longer view semiconductors as a mere industry. They see them as an instrument of national power. Over 21,000 semiconductor-related patents filed by Chinese entities in 2024, a 34% year-over-year increase, underline a pivot from catch-up R&D to aggressive IP acquisition and defensive patent walls. But the semiconductor struggle is only Act 1. Rome's proverb, "He who holds the gold makes the rules," is playing out in real time. Beijing has begun to recalibrate its staggering holdings of U.S. Treasury bonds, executing staggered sell-offs designed to sway bond yields and rattle global markets. It has diversified its foreign exchange reserves into alternative currencies and commodities. These moves, calibrated with surgical precision, aim to create feedback loops: higher U.S. rates, wider debt servicing costs for Western nations, and ripples through pension funds, mortgage markets, and corporate balance sheets. In other words, the battlefield is expanding from lithography suites into bond auctions and currency swaps. All of this has profound implications for technological leadership and geopolitical influence. Western suppliers, once secure in their market dominance, now face shrinking revenues. ASML's China sales plunged nearly 27% year-over-year in Q4 2024. TSMC reported slowing order growth from Chinese clients, while Applied Materials and Lam Research grappled with idled service agreements. The sense of obsolescence is palpable. A market that once defined technological trends is now racing to adapt to China's breakneck innovation pace. What unfolds next could define the coming decade. Will Western governments and corporations respond with new incentives, targeted fiscal relief, or flexible licensing arrangements to win China back? Or will they double down on restrictions, provoking further decoupling? Can alternative technologies such as photonic chiplet architectures, quantum annealing coprocessors, or novel materials like extreme pressure EUV resist emerge fast enough to disrupt China's momentum? Or will China's integrated ecosystem, backed by state power and fueled by fierce national will, outpace every countermeasure? We are witnessing the opening act of a high-stakes drama whose stakes extend far beyond fabs and foundries. It will play out in patent offices, bond markets, R&D labs, and international summits. The smartphone in your pocket, the data center powering AI, the defense systems safeguarding nations all depend on semiconductors. And the rules of this game are being rewritten before our eyes. If you want to stay ahead of these tectonic shifts, subscribe and hit the bell icon. In the comments, tell me, how do you think the West will react to China's decisive break? What emerging technology or strategic gambit will shift the balance next? Here on this channel, we dissect every twist and turn in the battle for chips and for global power itself.